unanimous vote for the presentation of the speech and the budget. The important point really is fiscal rectitude. That's come in really good. Besides that, even the net borrowing program, our poll gave a number of 12 lakh crore net borrowing as the conservative estimate. It's now coming in at 11.5 lakh crore, 11.7 lakh crore. So that again has sent the bond markets booming. It's about 7.1 now compared to 7.18 before the speech started. So there's a fair degree of, positivity over there. And I think it will advantage even the banking stocks. I saw PSU banks booming. Obviously, they have a lot of bonds and the bond prices are going to rise. So there are mark-to-market gains to be made, which will be carried on March 31. So immediate EPS impact on these banks. The other big announcement really is that expenditure in the current year is lower. It's not markedly lower. The original number was 45 lakh crore. She's brought it down to 44.9 lakh crore. So that again is a big positive in terms of fiscal rectitude. Largely that, but in terms of positivity for the stock markets, the capex plan at 12% higher. There were some expectations of 20% higher. I think it's about 11% higher. Even then it's higher. So over a 35% jump in capex in the current year and 11% to 12% jump in the current in the next year will be treated as positive. So we will have to keep an eye on the construction, railway stocks as well. I didn't see many of them rising, but I think that will be slowly interred.
The point is the buoyancy, tax buoyancy expected to be very strong? I mean, the numbers that she gave.
No, the number is only 12%. Now, I don't know what kind of nominal GDP they've assumed, but it is only 11.9% actually growth in taxes that they are assuming. Considering that it is 14 or 15% this year, on top of that, I wouldn't consider it a very ambitious announcement.
In fact,
it's a very conservative announcement.
In fact, every year, if you see year after year for the last 3 years, the government estimates are far lower and what you actually get up is much, much higher. So I'm not surprised that she has budgeted so much lower buoyancy on taxes.
Okay. I think the market is giving up because, we were outperforming global markets. So there is a bit of giveaway in the stock markets. But really, there's nothing in the budget unless you were expecting some massive capex, rise to 12 lakh crore. She's short of that at 11.5 lakh crore in terms of the capex bill. A little short of perhaps outrageous expectations or optimistic expectations, not outrageous. Likewise, perhaps the expectations on the PM, Kisan Samman Nidhi, we were expecting that 8,000 rupee. It can still come, but it hasn't come in the budget. But there is a lot of announcement on rural houses and as well on farming, on fisheries. So maybe if you add all that, there is a lot of income transfer waiting to happen. Yeah. But at the moment, that income transfer, I wouldn't see much for FMCG stocks at this point in time, because I think they were banking on a big rural transfer.
Ashok, you were absolutely right. And our long speech, one of the shortest, right? That we've seen. Will we see more in the budget documents as and when we get them? I mean, things on divestment, etc. I mean, to that point about taxes assumed, nominal GDP assumed, will there be more detail?
Could be. For example, they announced the extension of tax exemption for sovereign wealth funds in the infrastructure sector. But given that the two pillars have been infra and manufacturing, we didn't hear the same announcement on the new manufacturing, which was also sunset in this year. So it's quite possible that the budget statement will have many more details than what we have heard. But generally, it seems to be status quo on tax matters, status quo on GST, status quo on import duties. I think the two big announcements, as you said, are really the fiscal deficit, the macros, the fiscal, the borrowings, and continuing expenditure on infrastructure, which I think is great news.
I think that PM Kisan Samman Nidhi, somehow the buzz was that from 6,000 rupee transfers, it would be increased to 8,000. That's not happened so far. It can still be an election promise, but it's not in the budget. So that could be something which the market may complain, that we expected consumption to get a pep up, and that did happen. But that's actually minor. I think the important point is there is a lot of encouragement for rural housing. I think I'll just pinpoint the number. I think it was 20 million homes. Yes, 20 million rural homes to be built in the next 5 years. Now, that's a large number. So that can be seen as positive because homes is a many-sided multiplier impact. And on that note, why don't we get the man of all, the last word on housing. Keki Mistry, the former CEO of HDFC, is with us. Mr. Mistry, first thoughts on the entire budget. Extreme fiscal rectitude, way better than what the market was expecting. as well housing. The key point for you is 20 million rural homes is the target that they have set themselves for in the next 5 years. So clearly, the Rural Awas Yojana is getting a huge pep up.
Absolutely, Lata. I think it's a fabulous budget, truly a fabulous budget. There is something in this for everyone. And I think the biggest strength, as you said, is the fact that the fiscal deficit has been kept much lower, significantly lower than what anyone expected. People were talking of 5.5 and at best 5.3, and we end up at 5.1. So I think that's great for the system. As far and there is something in this budget for everyone. For each and every individual, there is something in this budget. I don't think we could have expected changes in the tax laws, because that, to my mind, would come after the elections in the final budget. So I don't think that was expected. One can always debate on what those changes can be in future. But growth for everyone, growth in infrastructure, target on housing, as you said, 3 crore houses have got done under the Rural House Program. Another 2 crore houses. The target is to do another 2 crore houses. And we must remember that housing creates a huge amount of multiplier effect in the economy. So it's not just the people who are employed in the housing sector, in the construction sector. It is also a multiple of industries, cement, steel, paint, power, and multiple other ancillary industries which are benefited when housing gets a benefit. So I think all in all, fabulous budget.
Okay, and I guess thank you very much for that, Mr. Mistry. Please stay on. The bond yields have now gone below 7.1 to 7.08. And I think as the matter, seeps in, that even the gross borrowing is far less than this year. This year it was, I think, 15.7. They're reducing it next year to 14.7, when $25 billion is likely to flow. So something like 2 lakh crore of foreign funds money is going to come in because of the index inclusion. So that's a very light load on the banks. That will mean that bond yields have still space to go down. And that's very positive for the corporate sector, because after all, you price it over a spread over the sovereign. So the sovereign yield falls, the cost of capital for corporates also falls. So I think this is actually a very pro. It's almost like a tax cut. I mean, it's almost like a rate cut. You don't get a rate cut from the Reserve Bank, but if the yield falls by 10 basis points, it's as good as a rate cut. So I would be very surprised if the banks did not
actually,
show some
for
kind
now,
of positivity.
the reaction is coming on bond markets. Equity markets are absolutely flat. It's actually just turned into the green. And I was wondering, maybe the reaction on equities is also just interim. And it'll pick up. As Lata, you said, I mean, as the markets digest what has happened, right? And the favorable fiscal math, which should percolate through banks and, I mean, various other... And of course, Mr. Mistry said there is actually, we've only barely scratched the surface in terms of the big fiscal numbers, but there is a fair bit for... I think pretty much all sections. Madhu Kela is also with us, founder at MKVentures. Madhu, great to have you with us here. Good afternoon. You heard the budget speech. What did you make of it? Status quo on taxation and those matters, but on the fiscal side, seems to be very, very favorable.
Yeah, I think overall it's a fantastic budget, I would say. That, given the election year, there was slight bit of nervousness that the government may deviate from the fiscal path, but not only they have adhered, but they have also given a clear direction for 2026 of adhering to 4.5% of the fiscal deficit. I think from a market perspective, this is the best possible outcome for this budget. Also, the next year borrowing number actually is slightly lower than the current year, which
Much
is again
lower.
a very, very good news, I would say, from the market, from a market perspective. So I would say, given that it was an election year, and given that there was all the reason to be a little bit more populist than what they have been, I think it's a very good news for the markets.
Oh, absolutely. This is actually a big signal to the market, right? And I think now the market is starting to pick up a bit. The Nifty, the Sensex have moved into the green, although by a very small amount. But the glide path to fiscal consolidation is something that will continue. And I think the street is going to take that very, very positively. Madhu, the other big signal that has come through from this budget is that it is a through and through budget that's focusing on infrastructure and housing, right? We spoke about a big boost to housing, but even the FY25 capex outlay is up about 11.1%. That's largely in line with expectations, but that's been the main focus area for the government. How are you looking at these two spaces, infra, capex, as well as the housing sector?
I think it's a clear continuation. If you look at the first part of the finance minister's speech, we don't realize how much road has got traveled, whether we talk of affordable housing, whether we talk of infrastructure, whether we talk of job creation, loans being given to smaller entrepreneurs, Mudra Yojana. So, on a year-on-year basis, it is not looking as impactful as when it is spoken for the last 10 years. So I think there's a clear-cut continuation. And though personally I may would have liked to see the capex number a little bit higher than what they have done, but considering that it is an election year and there will not be much of the movement in the first 3-4 months of the year, this number is still good. But I think fantastic continuation for housing and infrastructure of the old policy, which again, I would say the great news from a market perspective.
Yeah, actually the total capex expenditure is 11.1 lakh crore compared to 10 lakh crore. So it's about an 11% increase in the capex bill. I'm coming to you, Mr. Mistry, but the man who would be most delighted with the fiscal deficit cut would be Sajjid Chinoy. Sajjid, you were voting towards the 5.2%. You were the most optimistic, by the way, or if I want to say most conservative. She's done better than that. Your comments.
I think the budget needs a huge congratulation. The foundation of macroeconomic policy is to be counter-cyclical. And when the economy needed, we saw a big push over the last 3 years. Now growth is recovering. And it was really important for the fiscal to scale back for two reasons. One is what we're not seeing is that even as the center is consolidating this year, state deficits have widened. So the consolidated deficit is larger than is believed. And this was a year where despite strong growth, public debt to GDP actually will inch up. And that tells you the deficits had to come down for peace times. I think the government has hit exactly the right chord. We need fiscal conservatism. And what's really important is that the capital expenditure was not compromised at the altar. So we've got both a combination of capex being held steady and the deficit coming down. I'll be curious to see how much of the consolidation happens on the revenue side, where we had more buoyancy last year, how much will happen through asset sales, perhaps announced in the July budget, and how much happened through expenditure rationalization. But for now, I think this is just what the doctor ordered. And this is what, the focus now has to be macroeconomic stability, given the focus on growth the last few years.
The tax growth is seen at 11.9%, not even 12%. Very legit,
very conservative. That's very conservative. I think there'd be upside to that. And what happened this year, taxes were budgeted conservatively so that the entire consolidation happened on the revenue side, not on the expenditure side. So,
I think it's more conservative than that, Sajjid, because from what I see, and I haven't seen the actual budget table, I'm only going by the memory of the speech. She said that the total net tax receipts are 23.24. The budget estimate itself was 23.3. So looks like the revised estimate is not taken into cognizance the better performance this year as well. It looks like that, but I could be speaking too early. I'm only speaking by what I heard. If on this lower, conservatively estimated base, they are seeing a 11.9%, then the actual estimate is even more conservative. But I could be corrected. I could stand be corrected. She has not revised the number higher, though the actual performance of the first 10 months is much higher. So I could have,
And again, we have last installment yet to come. The last installment is yet to come.
Oh yes,
and
the
that
fourth
could be
quarter
very,
is
very
yet to
robust.
come. So it could be much better. There's no doubt about that. Mr. Mistry, what do you see in the housing sector now? With overall interest rates itself, the sovereign borrowing so much cheaper, are you expecting rates to go down even without a rate cut? The effective borrowing cost coming down?
I think liquidity in the system should hopefully get better over a period of time. And as liquidity gets better, rates will certainly start coming down. But the buoyancy in the economy is so high. The feel-good factor in the economy, the feel-good factor amongst people is so very, very high that a 0.25%, 0.5% difference in interest rates is not going to make a very material difference in terms of people's willingness to go and buy a house. I think that demand is strong. We've seen 16% growth for housing loans in the system on a base which is continuously increasing 16% year after year. And in my opinion, the growth prospects in the years ahead could be upwards of 15 to 20%. over the next several years.
Okay. Now, this is something both Mr. Mistry and Sajjid should hear. The assumption of dividend from the RBI and public sector banks is 1.5 lakh crore. That is the revision in the FY24. And still FY25, they are expecting the same amount of 1.5 lakh crore from RBI and PSU banks. Now, PSU banks are going to do very well. So I think the assumption of this non-tax revenue is a very big buffer. So overall total receipts, I think, is going to do much better than tax receipts. That's my guess, but I'm still waiting for the entire table. Madhu, you have to tell us something about stocks, yaar. Looking at this, are you a buyer? You're a buyer in what sectors? Public sector banks, just for your information, if you don't have the screen in front of you, they're all jumping higher because mark-to-market gains on the bond book is very much there. Your thoughts, anything you would go out and bet on now, sector-wise? Madhu?
Yeah, I think, Lata, we continue to be very positive on the public sector banks. You've heard me many times, so I'll not repeat it again. We continue to be positive. We continue to be positive on the overall capex space, specifically the EPC companies, which are yet to be discovered by the market. But Lata, the broader theme is that, what we spoke even last time, the broader theme is that it's like a sigh of relief for the overall market that government has adhered to fiscal consolidation even in a year of election. So that's, I think, the biggest message. So the party in the market continues, it's a buffet out here. You choose what you want to buy.
Absolutely. I think you're underlining an important point. Why would a government not go and be, a spend-on budget? Because you're pretty confident politically. So that is also perhaps a message. Yes, Mr. Kanabar.
One thing which I didn't hear
Exactly.
was anything on disinvestment, because given how the PSU shares have moved up, really I was hoping there'd be some announcement to say this is what we are wanting now to do on disinvestment because the prices
I am
are
sure it is there in the table. I'm sure it'll be there in the table, but she's decided to keep it a short speech. So she hasn't told us, but it's quite possible that there is going to be a better divestment number. But let me get more guests in. Raamdeo Agrawal, chairman and founder, co-founder of Motilal Oswal Financial Services with us. Raamdeo, first thoughts. What do you make of the budget?
Yeah, so I think the fiscal deficit coming at about 5.1 is a kind of a way beyond anybody's expectation.
Absolutely.
And that has its implications in the government borrowing, government expenditure growth. And so I think one has to see the details, but clearly it is positive for the bond markets. The rush for the bonds will be less, and hence the yield will fall, which market immediately signaled that. And in any case, we are talking about globally interest rate drop kind of a situation on a 12-month basis. So maybe it is good for the equity markets as we go forward on a lower interest rate scenario.
Raamdeo, hi, good afternoon. For banks and financial services where people have made such big bets, so far has not really worked out. What does this mean? I mean, we were discussing this earlier and you also briefly mentioned it. Cost of funding, cost of money perhaps reduces without actually seeing a rate cut.
Yeah, so let's see. I mean, right now, there's a lot of dichotomy in the sense that credit growth is 15-17%, your M3 growth is only 9%. So there is a lot of liquidity squeeze, and I'm sure the RBI is keeping it for keeping the inflation under control. Maybe you ask all the economists who are coming there why there is a gap and how does it get resolved. Good thing is that economy is speeding past at the rate of 7.5%, and that is a government has got that growth rate. So I don't think they want to put further fuel. Last year before, economy was coming out of COVID and all, so they really upfronted the capital expenditure. Now, since the economy has got its pace, I think they want to take a breather and they want to allow the private sector to take up the things. But we'll see how exactly the interest rate scenario shapes up and how strongly the private sector responds in a given situation.
All right, well, markets are absolutely flat right now. So let's get you some more opinion coming.